Hey traders, it's Sean Fortune here of this week's Weekly Forex Forecast for the 17th of August to the 21st of August 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for future weeks. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we noted that the dollar index is still in a downtrend, although it is lacking momentum. It's starting to slightly correct. It has not yet reversed in the near term. That will happen, as I said last week, on a break above the 93.99. And last week we highlighted the 93.67 as an area to look for a bounce to the downside in the dollar index. We did get this, and we did get a nice bounce to the downside. As the dollar index is in an overall downtrend, we are going to go into next week preferencing dollar weak positions once again. But just bear in mind, we are starting to lack a bit of momentum, and when we go through the charts this week, you'll see a couple of the pairs are actually structured in the opposite way to dollar weakness. And although we prefer to go into next week looking for dollar weak positions, we may look at one or two of those in the other direction, just as a part of, let's say, a synthetic hedge plan, which we discussed last week. So overall, we're going to this week with a neutral to bearish bias on the dollar index. But since the dollar downtrend is still intact, we are going to favour dollar weak positions as the primary setups this week. So the next market we're going to look at is crude oil. Now, last week we started the week in this area, and we said last week we're looking for a run into the 43.69. We did have a bullish move to the upside, but you can see this was actually quite limited. I mean, we pretty much went to nowhere last week in crude oil. We went up, down, and we ended the week up, but we pretty much moved sideways. So this was more or less a nothing week in crude oil. For anybody not involved in crude oil from last week, what we would like to see is any further pullback towards the 39.66 is going to be viewed once again as an opportunity to look for bullish breakouts to the upside. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at the 43.69. Now you can see if we get above the 43.69, the next major key area of resistance, the upside, is all the way at 48.27. So we have pretty much nothing but air between here. So we could see a pretty nice rally above the 43.69. But for the time being, in the near term, next week, this is the setup we'll be looking for that rally into the 43.69. So next market we're going to look at is euro dollar. Now, we started the week in this area and we highlighted the 1.1749 last week as key area of support that we were looking for a bounce to the upside in this market. We did bounce from the 1.1749 and we're starting to make our way towards the target of 1.1960. So very simply put, anybody who's not involved in this from last week, any pullback once again towards the 1.17490 is going to be viewed as another opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.1960. So the next market we're going to look at is pound dollar. Now, last week we highlighted the 1.30450 as an area to look for a bounce to the upside, and we did bounce from this area, and the uptrend in pound dollar is still intact. Again, we didn't really do anything last week in this market, and this is just reflective of the dollar index itself. The dollar index didn't really move, and we saw a lack of volatility as a result across the board. So going into this week, we are still looking for the 1.3200. I still, just as I said last week in this market is a little bit cramped. That is to say, it may be difficult to actually find good risk reward setups in this market. But if we can find those opportunities next week and the setups appear, we are going to be looking at initiating long once again for anybody who's not involved from last week to the upside. And we would like to do that if we can come back and retest the 1.30450. This would again be an opportunity to look for a breakout to the upside. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set from last week at 1.3200. So the next market we're going to look at is US dollar Japanese yen. Now, last week we had a reversal to the upside in the US dollar Japanese yen. So even though the dollar was kind of neutral to bearish last week, we bounced from that key area of resistance and we started to sell off in the dollar index. We still saw the dollar rise against the Japanese yen. This is a sign the dollar itself is neutral as opposed to being strong one way or the other. As a result of our neutral to bearish bias in the dollar index going into this week, we are prepared to play the markets both ways. And as you can see, the US dollar yen is structured to the upside, so any pullback towards the 105.70 next week is going to be viewed as an opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, on the 107.43. So the next market we're going to look at is Aussie dollar. Now last week we highlighted the 0.71150 as an area to look for a bounce to the upside, and we started the week over in this area. We did pull back and we bounced from this key area, and we're starting to form what's known as an inverse head and shoulders, and this is a sign now that we are likely to start making our way towards 0.7290. So very simply put, going into this week, because of really a lack of movement in this market, I mean, we started the week here, we bounced at the 0.7115, and that was pretty much the entire move for the week. We're still in this area, so any pullback here and anybody not involved from last week is going to provide an opportunity for another bullish breakout to the upside, and we're going to be looking at initiating longs up towards the next key of resistance to the upside, the target set at 0.7290. So the next market we're going to look at is New Zealand dollar. Now in previous videos we highlighted the 0.66790, and you can see we had a really nice bounce from this area, and we made the way to our target last week at 0.65380, and we took out this target. This was the target set from last week. The reason I left this on is because this is an interesting one, because last week we noticed that this was structured to the downside, and even though the dollar is still in a downtrend, the dollar downtrend is still intact, because we were lacking momentum in the dollar, we noted that we may actually see this decline to the downside to the 0.65380. So still having a weaker dollar, but New Zealand declining against or depreciating against the dollar anyway. And again, this just underscores what we're looking at this week, which is that we may once again see some currencies appreciating against the dollar and some currencies depreciating against the dollar at the same time. This happens when the dollar itself is neutral. So when we're looking at US dollar yen to the upside and we're looking at euro dollar to the upside at the same time, it's because of the neutral bias in the dollar index. So very simply put, we are looking further declines to the downside this week in New Zealand dollar. Any pullback in this area is going to be viewed as an opportunity to start to look, and I don't think we're going to come all the way back and retest the 0.66790. So any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups, and we're going to be looking at initiating shorts down towards the next key of support to the downside, the target set at the 0.6440. So the next market we're going to look at is US dollar Swiss franc. Now last week we started the week in this area, and we were looking in last week's video for a run into the 0.9190 and a bounce from this area. We had a little bit of low volatility in this market last week because of the dollar index, and we've seen this now in a number of these dollar pairs. But we have once again pretty much turned at the pip at this key of resistance. We had a really nice sell-off from this area. So very simply put, for anybody not involved from last week, any pullback once again towards the 0.9190 will just simply be viewed as an opportunity to look once again for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside, the target set at the 0.9000. So the next market we're going to look at is US dollar CAD. Now last week we started the week right here, and we highlighted in last week's video this was a key area to look for a sell-off to the downside and to look for short positions. And we did sell off from the 1.33870, and we came all the way down, took out the target at the 1.3203, which was right here. And we pretty much turned right at the target from last week. So this was a fantastic move, pretty much caught the whole move here from key of resistance to the target last week. And very simply put, going to this week, we are once again going to be looking for short setups in this market. In fact, this was probably the best performing pair in terms of payoff from last week. But any further pullback in this market is simply going to be viewed as an opportunity to look for short positions. And we're going to be looking once again at initiating shorts down towards the next key of support to the downside, the target set the 1.3172, and if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.3081. And last but not least, we have gold. Now last week we had a big sell-off in gold, and this is really, as it stands, just simply a correction of this major uptrend we had to the upside. This was a bit of panic selling, people seeing their profits evaporating and starting to just exit their positions, because traders, generally speaking, psychologically, do not like to give back any unrealized profits. And so this is just simply what this looks to be at the moment. This is not a trend reversal. As I say, this is just, as it stands for the time being, a pullback. Any further declines down towards the 181169 is going to provide us with an opportunity to start to look for bullish setups once again in this market. And this deep sell-off actually is quite a good thing if we are going to get further moves up, because to the highs and to the next key of resistance at 210438, we actually have the opportunity here potentially for very good risk to reward setups. So any further pullback is going to simply be viewed next week as an opportunity to look for bullish setups in this market. And we're going to be looking at initiating longs up to the first and foremost, the previous high. And if we can break through the previous high, we're going to be looking up towards the next key of resistance to the upside and the target set at the 210438. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.